Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
If you invested with a naughty promoter or an indisciplined promoter, वो आपकी wealth की बर्बादी निश्चित तौर से करेगा. And therefore you have to avoid naughty companies and indisciplined promoters.
Exactly. An investor who is an equity investor in India, for example, who is investing in companies, needs to be extremely vigilant, right? Of again these kind of risks, especially accounting and governance risks.
Hi there, my name is Saurabh Mukherjea and it's my privilege to invite you to join us in the 7th episode of Guru Mantra with Saurabh. I'm joined by my colleague in Marcellus, Krishnan. He's the head of our investment advisory vertical. So far in Guru Mantra with Saurabh, in the previous episodes, we discussed the core principles of high quality equity investing. We discussed the importance of patience for long-term compounding. In this episode, we will discuss the dark side of equity investing. How naughty companies, how poor accounting, poor corporate governance destroy shareholders' wealth. Obviously, we'll discuss this from a point of view of helping you avoid the dark side of equity investing. So, Krishnan, what are the things that we should look out for in stocks? What are the stocks that Indian investors should avoid?
Yeah. So again, maybe taking that example of Test cricket, which we discussed in a previous podcast, right? Like we discussed, it's very important in Test cricket to leave, not take risky shots, right? Essentially, leave, a ball which is, outside off stump, for example, right? Because it tends to be more risky. So again, for example, if it's a googly, right? So you just defend that against that googly, right? So the companies or the approach which we are going to talk about, essentially to identify these kind of you can think about this as balls in cricket, or maybe companies in the investment context, right? Essentially these are well destroyers, right? One piece of analysis which we did for BSE 500 companies, and this is over a 10-year period, where we found that nearly 40% of companies churn out of the BSE 500 index.
They get thrown out of the index.
They get thrown out of the index over a 10-year period, and these exits are mainly due to capital allocation or corporate governance issues.
The promoter invests money in the wrong places, and corporate governance means he does something naughty with shareholders' money.
Right. And generally, in some ways these are related. Right. So if you have bad corporate governance, generally capital allocation also tends to be bad, right? So if you look at Nifty, right, in fact Nifty churns by around 50% or so every decade, as compared to around 25% for developed markets and around 30 to 42% for other emerging markets, right? So this number in India is the churn even in our market cap indices is much higher when you compare it with other emerging markets or other developed markets.
Really, wow, very interesting.
Right? And what this tells you is there are the more cases of companies which basically go defunct due to poor corporate governance, capital allocation decisions, and in all these cases there is permanent and large loss of invested capital, right? So an investor who is an equity investor in India, for example, who is investing in companies, needs to be extremely vigilant, right, of again these kind of risks, especially accounting and governance risks, right? And need to have
just to be clear, this has got nothing to do with patience or impatience. ये time horizon की बात नहीं है. If you invested with a naughty promoter or an indisciplined promoter, वो आपकी wealth की बर्बादी निश्चित तौर से करेगा. And therefore you have to avoid naughty companies and indisciplined promoters.
Exactly.
Very interesting. Now, is there a framework that you can offer people which will help them identify who are the naughty promoters, who are the indisciplined promoters?
Sure. So at Marcellus, again, we have we have developed this forensic screening framework, where we are looking for, which is one of our key pillars, which I talked about in the previous podcast, the credible accounting pillar. What we do is we use a set of ratios, right? In case of non-financial companies, we use a set of 11 ratios, and in case of financials, we use a different set of or lenders, we use around 10 ratios, right? And basis these ratios, we decide whether a company is presenting its accounting in a fair manner or not, whether it's misstating its account or not, right? And in almost all cases, what you would find is this forensic screen is the very first step, right, which we use in our investing process, right? Because you cannot go ahead, with investing in a company or doing any further analysis on the company if you don't trust the company's accounts, right? If you cannot trust their financial statements.
So these 11 ratios Krishnan is talking about, if you want to get all 11 of them, you'll find them in our book Diamonds in the Dust. The book is easily available everywhere in the country. So for example, just to give you one example of a forensic accounting ratio which has turned out to be very effective. If you find a listed entity where the auditor's fees are growing much faster than the company's revenues, and I'm talking about say over 5-6 years, over 5-6 years, the auditor's fees are growing faster than the company's revenues. That tends to be a red flag, right? It tends to be a signal that something funny is happening in the company's accounts. Now, Krishnan, can you take us through an example of a naughty company where our ratios flagged danger, problems, and the company subsequently ran into a lot of trouble?
Sure. So we can take an example of Mtech Auto. So Mtech Auto was consistently classified in the so-called zone of thuggery. Right?
What is the zone of thuggery?
So essentially, these are the bottom 40% of the company.
Companies who are doing badly on our ratios.
Yes, those 11 ratios which we talked about, so essentially, this Mtech was consistently getting flagged as having doubtful accounting, and what our forensic screen was suggesting was it's best to avoid investing in this company, right? And again, there were multiple red flags. So before we dive into it, just a bit of history about Mtech Auto for our the listeners of this podcast. So Mtech Auto is basically an auto component supplier, right? It was founded in 1985. During the initial phase, it was a supplier to Maruti Suzuki, and then the company made inroads into new customers, Honda, Eicher, so on and so forth, and launched multiple new products. However, from 2001 onwards, Mtech consummated more than 15 acquisitions. Right.
Pretty much every year it was doing an acquisition. I remember.
Exactly, and which would come to define the company over the next 15 years until the start of the collapse in 2015. Right. While the most widely cited reason for Mtech's failure is its aggressive capital allocation, mostly acquisitions. Again, what our forensic framework suggested, there was substantial possibility that the company was misrepresenting its accounts.
Very interesting.
And long before, again, we knew that the issues in 2015, right? Now, if you just take our forensic accounting model, right, and you walk through the problems in Mtech's financial statement, just taking one ratio, for example, the cash flow from operations, CFO as we call it, to earnings before interest, depreciation and amortization. So
let's call it operating profit. So see, operating cash flow to operating profit, right? So ये जो ratio है operating cash flow to operating profit, this is in our business called the cash conversion ratio. मतलब for every 100 rupees of operating profit that the company is earning, for every 100 rupees of profit that the company is earning, how much cash flow is it earning, right? And a good company typically has a ratio of around 70 to 80%. कम से कम 70-80%. मतलब 100 रुपए operating profit पे 70-80 रुपए operating cash flow बननी चाहिए over say a 4-5 year period. So coming back to cash conversion ratio, how was Mtech doing on this?
So Mtech's cash conversion ratio, if you think about again over this 15-year period, 2000 to 2015, it was around 50 to 60% roughly.
Wow, amazing.
Right?
मतलब 100 रुपए profit पे केवल 50-55 रुपए cash flow बन रहा था.
Right. And one of the reasons for this poor cash conversion was Mtech's working capital, right? Which was the working capital cycle essentially.
So working capital cycle quickly थोड़ा समझा देता हूँ. So मानिए हर एक बिजनेस का वर्किंग कैपिटल साइकिल होता है. तो ऑटो एंसिलरी में वर्किंग कैपिटल साइकिल ब्रॉडली इज, आप मानिए आप रॉ मटेरियल खरीद रहे हो, से यू बाइंग स्टील एज रॉ मटेरियल, यू पेइंग सैलरीज टू वर्कर्स, यू पेइंग फॉर द इलेक्ट्रिसिटी बिल फॉर द फैक्ट्री. ये सारा खर्चा एन ऑटो एंसिलरी कंपनी हैज़ टू डू. स्टील पे खर्चा, बिजली पे खर्चा, वर्कर्स के वेजेस पे खर्चा. फिर वो कोई कंपोनेंट बना के मानिए मारुति को दे रहा है, 90 दिन बाद मारुति उसको पैसे देगा. इन दैट 90 days कंपनी का पैसा अटका हुआ है बिकॉज दे पेड फॉर ऑल दिस खर्चा, लेकिन कस्टमर ने उसको पेमेंट नहीं दी है. इसको वर्किंग कैपिटल कहते हैं. सो कृष्णन इज सेइंग इज एमटेक की कैश कन्वर्जन रेशियो कमज़ोर थी. क्यों कमज़ोर थी? क्योंकि उसका वर्किंग कैपिटल ज़्यादा था, काफ़ी सारा पैसा धंधे में अटका हुआ था.
Exactly, and the working capital was high because of high receivables, right? When I say high receivables, essentially the money that was owed to
by the customers.
By the customers.
So अगर आप एमटेक के अकाउंट्स को मानते हुए चलो, So ऐसा लग रहा था, if you look at Mtech's account, it was looking as if Mtech's customers were owing Mtech money. They were taking their sweet time in paying Mtech.
Yeah, and the doubt, the question of doubtful account arises here, right? Because when you look at the receivable days of Mtech, it was actually much higher than its auto ancillary peers.
Right. So no other auto ancillary company had these sorts of high receivable days, and therefore the suspicion arises or arose
Exactly.
That maybe these receivables are not really what they appear to be. Maybe there's something else happening here, which is making it look as if Mtech customers are taking their sweet time to pay Mtech.
Exactly. So this poor cash conversion, capital allocation decisions, again, this reflected in other ratios also, was identified by our forensic screen from 2006 itself. Again, if you just take if you had followed this our forensic screen, an investor would have avoided the permanent loss of capital when the massive share price drop happened when the issues came to fore in 2015.
So Krishnan ने ये काफी दिलचस्प बात छेड़ी है. If you are interested in forensic accounting, I would strongly recommend that you read Diamonds in the Dust. We've given several examples. We've elaborated at length on Mtech itself. You can find plenty of more details on Mtech, but there are several other examples. And if you have a detective type mindset, अब जासूसी की अगर आपकी mindset है, तो forensic accounting is an immensely interesting area to get into. पैसा तो बनता ही है, but साथ में साथ it's like a mystery. You're able to solve mysteries in the real world. खूब मज़ा आता है. पहले पकड़ लेते हो कंपनी नोटी चीज़ें कर रही है, 4-5 साल बाद दुनिया को ये बात समझ आती है. So let's move forward, right? Moving in further up into some more facts about the forensic screener. What more can you tell us about how the forensic screener helps you detect accounting quality?
So again, this is you can take an example of MeritorQ. Again, the forensic screen is the very first step which we employ in MeritorQ. Like I said, right, it's like in other strategies, this is the very first step. So even before we look at how indebted the company is, or how whether the company is consistently generating cash flows, it's consistently profitable, we are first looking at the forensic.
So MeritorQ, Krishnan, जो portfolio बनाने का तरीका है Krishnan का, and MeritorQ, what Krishnan is saying is, rather than first saying what is the profitability, what is the debt, his first job is to use the forensic accounting framework to figure out, are the numbers believable or are they not? If they're not believable, if the company is in the zone of thuggery, I presume you ignore it completely.
Exactly.
ठीक है. उसके आगे क्या करते हो आप MeritorQ में?
So we look at we look at companies which are clean, and then subsequently we look for companies which are consistently profitable, which have a low debt. Finally, we select companies which are both profitable as well as undervalued. That's and the undervaluation, we look at the current valuation versus the free cash flow generation ability of the company. Right? Select around 30 odd companies, and like I said, we regularly do this. We go through this portfolio construction process twice in a year. What we call as rebalancing, and like I said, it's a completely systematic process, and these rules are followed, no matter what happens in the markets. And the objective here again is to completely avoid emotions and biases.
So there you have it, folks. MeritorQ allows Krishnan to identify 30 to 45 companies where the books are clean accounting, debt levels are low, कंपनी के बैलेंस शीट में भारी भरकम डेट नहीं पड़ा हुआ. Third thing, profitability levels are high, and finally, just as importantly, companies available at reasonable valuations. अनुशासित तरीके से, डिसिप्लिन तरीके से कृष्णन ये मेथड इस्तेमाल करके, इस फॉर्मूलों का इस्तेमाल करके MeritorQ के क्लाइंट्स को एक पोर्टफोलियो बना के देते हैं 30 से 45 स्टॉक्स का इन्वेस्टमेंट एडवाइजरी कॉन्ट्रैक्ट में. Thank you very much for joining us in this episode of Guru Mantra with Saurabh. We wanted to end this whole series by giving you a sense of what can go wrong in equity investing. Equity investing should be done with care. It should be done with discipline. If you do those, it's life changing for you, the wealth it can create for you. Thank you so much for joining us.